Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The story of the week has been beneficial weather. Corn has been the most impacted this week. And as we can see from the charts, after reaching resistance near 439.5, the market really hit up against this area for quite some time and really then finally broke down over the last couple days. The market has since moved down into potential support that we have at 388.5, and the way in which it responds from here is going to be key. We're looking at moving into the end of the week and then into next week when we have the USDA quarterly report, and that report's going to be significant as historically it has proved to be a key pivotal time for the markets themselves. As we look at the corn contract here, we do have that 439.5 up above as key resistance. It's come through a couple levels just below. 408.5 was the next main resistance or main support level below. And now we're sitting just above that 388.5. That really has a good chance of holding on for the next couple days. As you can see, we have our volatility bands that are rising. As the market makes its way into this area here, we think support should potentially channel in near that 388.5 number going into first notice date. One of the attributes we've shared with you in the past is after the market makes a move through the point of control, and for this particular contract, point of control sits at 432.75. Once a market makes a move through that point of control, we'll often see a very rapid move to the next level on either side. The level below that point of control is at 390.75, and the market right now is very close to finding support near that level. We also have a potential timeline occurring here. That timeline looks like a good spot for this big downdraft to either pause from its move and then potentially consolidate along that 390 number. We're about halfway into the week, and so the way in which the weather forecasts continue to come in through the end of the week are going to be key. Taking a view of the December contract, you can see a very textbook move on the part of the December contract. It made a significant low at the 180-degree mark near 366.5. One full cycle up would be the next 180-degree mark. This is where we found key resistance up against 447. Now the market has since made a full 180-degree mark, which is where we would expect to find very good support near 405.75, which is exactly where the market is pausing right now. Additionally, you'll notice that the previous time that the market was near this area on its first attempt up, from that initial impulse, it found very good resistance here. So this is now going to become a very key level for the December contract. We anticipate that we'll see strength above and weakness below. If we're not able to hold this 405.75 area, we anticipate that we should see an additional downdraft that goes down to test at least 386 near the volatility bands as they are rising on their way up from the previous lows. In a similar vein, we'll notice here that one level above the point of control was at 452.75. The market had a very tough time making it up to that number, which is right above. Upon finding good resistance there, the market since collapsed. Our point of control sits at 419.75. Once the market broke through here and was not able to find support, he channeled all the way back down to previous areas that were tested. And this is where we're now finding very good support potentially, at least a pause after the big downdraft that we saw over the past 2 days. Below here, we'll see continued weakness, and up above, we can anticipate some strength. All things considered, the July wheat contract is actually holding up fairly well. After the big downdraft that we saw in corn, the soybean contract itself has now had a nice little pullback inside of its move here. this now is coinciding with potentially being oversold. It's not quite there as yet, but what we want to look out for now is if prices are able to reach down to about 1110, which is where we have very good support, and does not break that area and then turns back up, we could see one advance that makes its way back up to test previous highs near 1212 or even as high as 1250 before making a significant final top. So the contract itself is going to be very important to watch. Mind you, we're moving into the first notice date in a couple weeks, or rather in about a week or so. So since we have first notice date coming up, rolling over to the next contract is going to be key, and we may not have enough strength going into that first notice date to really have that push that makes it up above to break that previous high for this contract, but we could see it in the deferred contract. The recent overall price action has been well above the point of control levels, but we do see that 2 levels above the point of control sits at 1147. And at 1147, we're now finally coming back down to that area here. Now that we've broken down below, we'd be looking to find support maybe near the $10 mark for this contract, or again near that 1110 from the previous chart that we saw. Two things we want to note here for this particular November contract. We have compression with our volatility bands. And by means of compression, we have 2 sets of volatility-based resistance bands that have now come together and they are overlapping. Because of that, we have particularly strong either support or resistance here. And as the market has made its way down into this area, we're anticipating potential support. In addition to that, as we look at the price action, we also have a natural angle that we drew up from the previous low, anchored from that major low that we see here. As the market has made its way down into this area here, we see a nice bounce up in the market today in its price action. This is going to be very important for us here to watch. If the market breaks below here, we believe the market should reach about 1076 at a minimum. And at 1076, we also anticipate very good support here. So this is potentially a nice buy point for the market to make one final leg or one final advance to retest previous highs. The July wheat contract continues to have lots of trouble. We saw a very big move to the downside over the previous week. After that downside that we saw, the market consolidated last week for about 2 or 3 days. That consolidation here can be viewed as a continuation pattern. And now what we'll be looking for is for the market to make a nice move to the downside to test previous numbers that we called for in the past, about 448 at a minimum, possibly as low as the 444 mark, which would coincide with our 360-degree mark here. So as he moves into oversold here, he's looking like he's having a lot of weakness and may not survive the previous support that he saw at 455. The point of control for this contract remains at 482.5. You'll notice here 482.5 after the market broke through it is exactly where the market came back up and actually found nice resistance last week. After dropping, coming back up to that point of control number, he has since fallen back down again, and in all likelihood, we're probably looking at a move that comes back down to test 452, 451 3/4 at a minimum, which is very close to where we are right now. Below that, he would then potentially make a move down to one level below that at 449.5, which coincides with that 447 mark that we just discussed not too long ago. In closing, we'll have a look at the August crude oil contract. Here we're looking for a potential high to occur near the 53 to 54 number. The market came in fairly close, up at about 52 or so for this particular contract. And now what we're looking at is a lower high coming in after a smaller sequence of this 5 or this sub 5 wave Elliott count on this final leg 5 move. That being the case, if this current wave 5 high is the terminal spot, this would be confirmation for this final wave 5 high. That being the case, depending on where this move goes, if we're able to beat or eclipse this previous high, then we have one more leg up potentially before we tank back down. If this market now comes back down and breaks this previous low, then we know we have at least an ABC move. We'd be looking for a move that mirrors this length to occur from this high coming back inside here at a very minimum. So now we're at a very critical point for this crude oil contract. It's starting to look to us like this lower high is going to hold, since we are up against volatility-based resistance along with the $50 mark at our 45-degree angle here. So we're looking at potential continued weakness here. We can potentially see that this wave 5 top may be confirmed closer to that 52 mark, and to look for a nice move to the downside, especially as we're looking at our volatility bands are starting to point to the downside. Thank you so much for joining us for our weekly market update. Look forward to touching base with you at our next session.